The company has done fantastically well. And it's really a testament to our people and the businesses that we have. The businesses have been set up very well. We ran into a little bit of a rough water for a few reasons, but back on track now. Growth is coming from literally all areas. Automotive is going great guns. We've got some fantastic products with very long wait times, which we don't like, but that's driven by huge demand, far more than we've expected, that we've seen. As an example, we sold 100,000 cars in 30 minutes in our last launch, which is $2.3 billion worth. Farm equipment has been doing very well, also led by growth in our farm machinery business. We've got our IT services business with good tailwinds behind it, some challenges now as there's some slowdown that we see in Europe in particular, in the US to some extent. But on balance, it's moving at a good pace. Financial services has been a good turnaround story. And businesses in hospitality, logistics, real estate, solar have all picked up nicely. So we are in effect firing on all cylinders.
Yeah, well, thanks for the overview. And of course, that is being reflected in the stock price, where it's trading and how it's done over the past couple of years. One thing you said about delivery times, you say that demand has been very, very strong. How much of the delay in delivery times is also just due to sourcing of the relevant inputs that you need?
So some of it last year was driven by that. I'd probably say about 15-20% at one point in time, and then down to 5 to 10% at another point in time was impacted based on semiconductors in particular. But the demand for us has just been phenomenal. I talked about one model where we sold 100,000 in 30 minutes.
Yeah.
The two models prior to that that we launched, one of them we sold 50,000 in 3 hours, and the one before that 50,000 in 3 days.
Does that put pressure on you to think about scaling up even more?
It does.
Yeah.
And we are in process of doubling our capacity for auto, even in the face of a potential recession, because we do feel that with the level of demand, it's something that we need to do at this point.
So I want to turn to electric vehicles, because so far, even though the Indian government has a very ambitious target of wanting to grow that part of the market, as of now, electric models only make up about 1% of annual car sales. How do you get that number higher?
So first is by, in a sense, creating and delivering very good cars. So we haven't seen much of born electric in India as yet. That is something that will come in as we launch 5 born electric models. And we're really looking to take the SUV market by storm with 5 born electric models. But prior to that, we're launching another electric vehicle later this month, in fact. And we're going to see good traction with that. So I think it's a function of getting the right models in place. And then getting the charging infrastructure and beyond that.
Well, that was going to be my next question. I know that the Indian government has been very focused on infrastructure projects. To what extent is some of that focus going to be directed at building up the necessary grid and infrastructure to support electric vehicles?
The grid is in place. What we need really is charging stations. What will happen is it will start with charging stations at residences, and the public infrastructure will come in over time. So what we expect is that we will move to about 25-30% electric in the next 5 years, and then we will see an inflection point at some stage, which should largely be driven by charging time. Today, it takes 45 minutes for a fast charge. Our born electric models will come in with 30 minutes for a fast charge, but even 30 minutes is not enough. It's got to go down literally to about 10 minutes or so, where you can really go in as in a gas station and charge the car. Especially in large urban areas, that's essential.
Yeah, no, absolutely. That's the charging time and also access to some of those charging points as well, which is going to be key, not just in India, but over the rest of the world as well. I thought it was interesting, before we came to Davos, last Friday, Tesla announced that they were cutting prices of their electric vehicles in Europe and in the US, and they had already started doing that in China. What does that forebode for the industry?
I think each market is going to be different. The Indian market has always been hyper competitive with very high value. So if you look at the vehicles that we made over time, they've always delivered the highest value to consumers. And our sense is that other markets may start catching up to that as they see greater access to some of the models that we and some of our competitors build.
But what does that do to margins on the manufacturing of an electric vehicle overall?
Again, it will likely impact Tesla margins, obviously. But as we look at electric versus ICE for us, we feel pretty good about where we can bring in electric vehicles with some of the subsidies that the government has today, which are essential.
Yeah.
But with those subsidies, we should be at some level of parity with ICE.
One of the big macro themes we're talking about this year is the reopening of the Chinese economy. It's been closed for a couple of years now. Does that add a tailwind to your outlook for 2023?
That does add a tailwind. And as things open up, as things start getting stabilized, because we've gone through a time when there have been lots of supply chain shocks. And it would be nice for a change to have things stable and working well.
But in terms of marginal demand for Mahindra, is it a market that you can expect to see bigger growth in, or is it difficult for you to compete there?
We are not playing in the Chinese market right now.
Yeah.
So in terms of direct access to that market, no. But in terms
indirectly, in terms of
indirect access,
yeah.
I think there's a huge benefit there.
And then just to round things up, I saw in August you deepened your ties with Volkswagen Group, which is interesting. Talk us through about these types of cooperation, these deals that you can ink within the auto industry, because I think that also ties into the theme of this year's Davos, which is, cooperation in a fragmented world.
This is an exact example of that, and we have tremendous respect for the Volkswagen Group and the leaders there. They've got a very ambitious plan for electric, as well as a very good set of products that they're going to bring out. Their underlying platforms are very strong, and it was in that regard that we felt that they were a great partner. And we're starting with batteries and motors and a few elements of our electric platform, and we will deepen our ties as we go forward.
I guess one final question to round it up. When you think about the transition to electric vehicles, of course, about 30% of the price of the vehicle is based on the price of the battery. What can be done to bring down the price of batteries?
Scale is going to be the biggest driver of that, and technology to an extent. And we do see much better battery technology today than we saw a few years ago. If you take the example of solar panels, and where solar panels were, let's say, a decade ago versus where they are right now, you see a big change in pricing.
Yeah.
And that is really the path that we should go down, and that will also help subsidies from the government reduce over time as battery pricing goes down. The subsidy is essential right now to bring manufacturers into the market, but that has to reduce over time.
Are there a sufficient amount of subsidies available right now? Are governments doing enough to encourage that?
I believe they are. And I believe the onus is on manufacturers now to have great electric cars with good designs, performance, all of those things. And that's going to drive the road ahead.
One last question just on the general macro environment in India. To a certain extent, India has stood out because it has exhibited high growth levels at a time when you see Europe on the brink of a recession, US growth moderating, close to recession, China closed up. Talk to me about your view of how you think the Indian economy is going to pan out next year.
We see the Indian economy very well poised right now. The government has taken a number of very quick actions in terms of increasing interest rates, in terms of at one point levying export taxes on certain key products to be able to keep inflation down in India, and that has worked. We are present in over 20 industries in India, and what we're seeing across those industries is actually a very positive view. India will get impacted. When the world goes through a recession, it's not as if India will be left out, but what we do feel is that the impact on India will be a lot less because of the inherent fundamentals in the country right now, and the fact that inflation in India really hasn't galloped away. It's well under control, and therefore, given the actions that have been taken so far, we see India in a very good spot.